Yo, what's going on, YouTube? Welcome back. Mitchell Waxler here. And if you haven't already, make sure you hit the subscribe button, you hit the bell. I have so much more content coming out for you all, so you guys got to be on the lookout. In today's video, I'm going to be going over CADJPY. I'm going to be sharing with you all a trade opportunity that the team and I caught here previously, but I'm also going to be sharing with you guys some things that you need to look at so you can be, capitalizing on the picture perfect trade opportunities. Now, nothing's ever really going to be picture perfect, but if you are patient enough and you have that discipline, you'll find crystal clear setups with little to no drawdown. So let's go ahead and let's dive right into CADJPY. Now, we're here on the 4-hour. For those guys who've been trading smart money for a while or not, it doesn't really matter, but you need to understand that smart money does not trade on the 4-hour time frame. They don't trade on the hour or anything below that. Smart money, what I like to call the big ballers, they only trade on the bigger time frames. Think about it like this. They have big money, so why are they going to trade on little time frames? No, big money trades on big time frames. Little money trades on little time frames. So if you're trading on little time frames, ask yourself, you want to be trading with big money or little money, right? And if you can develop that discipline to trade on a higher time frame, I guarantee you'll have better results. Now, looking at this right now, just on the 4-hour, so you guys can see what's going on right here, right now, you can see that there is a crystal clear opportunity to enter into the market right over here. How do we know that? Well, you have these relative equal lows with these right here, as well as that wick. And you have it one more time, came into this zone right up over here. The market came down. It came below all those lows. Why? It needed to take that liquidity. Once it took that liquidity, it immediately turned around and shot right back up to the upside. But if I were to take a line from this low right here, this wick, and we look to the left, you can see it came to that very last down candle before the up move, that institutional candle that we're always looking for. So we can mark this up. We have the open and we have the 50%. Let's drag this into the future. All right, now we have our zone on the 4-hour time frame. And that right there was your opportunity to enter in on the buy. Now, as we continue to follow the market, you can see after that buy opportunity, it came up and it came right to this previous high over here. If we were to go to the line chart and really see the volume, right? You got to think, wicks is retail traders. The body is smart money. It's the big ballers. So if you go to the line chart, you'll really see what happened. Well, when the market came up here, what happened? It created equal highs. A lot of people are trading this. A lot of people are selling off of this zone. So what does that mean? We have money sitting above there. The market wants to come and take that money. So let's go back to the candlesticks and we'll continue to zoom out and kind of see what's going on right here, right now. So as I, talked to a lot of people was looking at this area right in here. Why this area? Well, this move to the downside was smart money pushing the market down to take the liquidity over here before it pushed it back up. So a lot of people simply took this area and they took that very last down candle before the up move and drew that into the future, creating their new institutional candle. Let me delete this. So now we have our new institutional candle on the 4-hour time frame. I noticed a lot of people are looking at this candle and this is a great trade setup. However, smart money trades on bigger time frames, not smaller time frames. So you might have missed this opportunity for the buy because the buy opportunity was right in here, not down over here. So how could we have caught this trade opportunity right in here? Well, if we go to a higher time frame, such as the daily, and we see what's going on a bigger time frame, you can really see where the market is trying to go. So let's delete this real quick. Let's clean it up. I'm going to clean it all up. Now you can easily see with this whole consolidation area, we have a schematic playing out. We have an accumulation schematic playing out. And that original institutional candle is going to be this one right here. This was that very last down candle before the up move in this beginning stage of the accumulation phase. And if we were to drag out the open in the 50% into the future, you can see what happened. It played off of this area 1, 2, 3 times. But notice what happened on that third time. This is where it dropped below these previous lows before it made that move to the upside. Again, going to that line chart, you can see it a lot clearer. We have a low here, we have a low here. This just went right below those lows and then immediately turned around and it created equal highs. Now, noting that this was that original institutional candle that we were looking at, we now found within that area a new institutional candle that should have caught our attention, which was this candle right here. Now, marking up this candle, the open in the 50%, dragging that to the future, we simply now know that anywhere in this gray box is a great opportunity for a buy. Why? Because we have our equal highs right here. We have our target. We know where the market wants to go. After it came up here, made that equal high, it immediately came right back down to this area. And as you can see, what happened? It shot up to the upside. And it's taking out those highs right now. And more or less, it's probably going to continue up. Now, breaking this down to smaller time frames, I want to show you guys something that plays an important part into trading, which is time, right? They say time and price is key. If you don't follow time and price, you guys need to take notes, because time and price is everything, especially knowing what pair you guys trade. I highly recommend taking 2 to 3 pairs and mastering those pairs, because the moves that happen with certain pairs happen at the same times over and over and over again. Not only the same time, but the same days. Like whether, a pair reverses on Tuesdays or Wednesdays or Thursdays, you'll see patterns within certain pairs. Now, as we look at CADJPY on the hour time frame, I'm going to mark up certain areas where the best trade opportunities were taking place. So these 2 yellow boxes are areas where you could have had a perfect entry with little to no drawdown. And as we look at my crosshairs, I want you all to notice the time on the bottom. So at the beginning of this box right here, you can see it is 12 a.m. and right over here, it is 10 a.m. Okay, so let's tighten this a little bit more based off of this wick and this wick, the lowest areas of trade opportunity, the areas where we would have had the best entry possible would have been this wick. Now, notice this wick right here happened at 2 a.m. So people who started buying right here just got too excited. And then what happened? It dropped. It hit everybody's stop loss. And as it dropped, people started selling, because most people aren't looking at those higher time frames. As soon as something happens on a smaller time frame, they tend to change their analysis very quickly. However, if you know what is going on the bigger time frames, you'll stick to your overall bias and you'll know exactly where the market wants to go next. So as you can see, this is prime time trading. 3 a.m. to 10, 11 a.m. is the best time to be trading. So this was a great opportunity to be entering into the market, as well as this over here. We can look at from here to here. This is 7 a.m. to about 5 a.m. or 5 p.m. So the best trade opportunity would have been right over here in that prime time New York session. Now let's rewind a little bit. Why are these 2 areas a good area to enter? Well, what is this gray box we have marked up? It is a daily institutional candle right here. This is our daily institutional candle zone. So a good buy would be anywhere in there. Your stop loss will go right below the body of the last down candle before the up move in this instant. So if we were buying right here, your stop loss would go right below that body, and your take profit will be your target, which is the equal highs right there. So in this scenario, you're going to be risking about 60 pips to make about 130 pips. That's a great risk to reward. And as you break it down to smaller time frames, that's where you can find that picture perfect entry. So as we move down to the 4-hour and even the hour, you may have not have caught this entry right here due to the fact that there was no crystal clear institutional candle on the 4-hour or the hour. Now we know to buy anywhere in there, but what a lot of people do is to minimize their risk. They're looking for other institutional candles within higher time frame institutional candles so they can decrease how much money they're risking and still have that same amount of gain. So they're limiting their risk and keeping their gain to the same. So you might have missed this first opportunity. Now, if you're looking at it just from a daily perspective, you should have known to press buy anywhere in this gray box. If you're willing to risk, 60, 70 pips, but most people aren't, which is why when you break it down to the 4 hour or hour, you're looking for other institutional candles to the left that happened inside of the daily institutional candle. Now, there's some things over here that, stick out to me, but right now, I don't even want you to worry about this first trade opportunity. It's okay to miss the quote unquote picture perfect trade opportunity, because if you're patient enough, there will be another one. So what happened here is, if you miss this trade opportunity, it's pretty easy to find another opportunity after the first one. Well, what happened in this consolidation phase? Well, it consolidated, it made that push up, and then it immediately dropped. After it dropped, it came up, it took out these highs, and it took out these highs, consolidated, and then made its way back. Right at the beginning of New York session, the crossover between the crossover between London and New York session, it came right back to not only the daily institutional candle, but now we have a clean hourly institutional candle that's sitting within the daily institutional candle. In this scenario, I will mark up these 3 candles and view them as one. Because we had equal highs right here, smart money sold the market right here to push it down 1, 2, 3 times before they went and turned the market around completely and bought it up. So if we mark up this candle as one, these 3 candles as one, we have the open in the 50%. I'll mark up the 50% so you guys can see it. We'll take the open in the close. 50% will be right there. We'll go ahead and delete the Fibonacci. So now if the market comes back to our zone, you'll see how we can simply have a smaller stop loss due to the fact that we found an institutional candle on a smaller time frame within the bigger time frame. So this is our institutional candle that we're looking at on the hour time frame that's sitting within the daily institutional candle. If we enter anywhere in this gray box from here to here, right? Let's say we entered right there. Stop loss would go right below the body of these candles, right there. So now you can see we're risking about 25 pips. Target will be the same, which is this equal highs right over there. All right, so we're risking now about 25 pips to catch 110 pips. And as you can see, when the market came back, it came right back to this area. At what time? At the end of London session, at the beginning of New York session, prime time trading times. You capitalize on this trade, you press buy, you put your stop loss there and let it ride out. Don't let this market go up and pull back scare you. I always tell people, put your stop loss in, put your take profit in, and let it ride out. If you do that, watch and see how profitable you start becoming, because a lot of people, they would have, took their profit right here once it started turning around, or once they, hit break even, they might pull out, or whatever the case may be. They don't have that patience to let it play out. But as you can see, if you sat back, trusted your analysis, you knew what the higher time frames were doing, you would have caught an easy 100 plus pips. And I believe this thing is going to skyrocket. Yes, we're probably going to have a pullback, but more or less this thing is going to the moon. So I hope you guys got a lot of value. If you have any questions, leave a comment, hit me up personally. I got you. And I hope to see you guys on the next call. So let's get it.